Good morning. It is Tuesday, January 19th. This is The Street Live. I'm Catherine Ross, and I am joined by Jim Cramer. Jim, how are you approaching the markets on Tuesday?
Well, I think that there's an upward bias once again to technology, particularly the semiconductors, which is rather interesting because we bought some AMD this morning, which I think is down a lot off of Intel. But the semiconductors that they're buying have to do with Apple and have to do with industrials, and it's almost as if what people are saying is, look, unless it's industrial semi, I don't care about it. On the other side, we're seeing a lot of action that I would say you look at a Costco or Walmart that are down two that we like, and you're getting that same thing, which is they don't do any better if the economy opens. There's a lot of cross currents today because the bank stocks are acting as the economy is not going to open. They're all down a lot, but I think that's just profit taking. The very stalwart retailers are going down in favor of the ones that are more ephemeral. And then there's this undercurrent that's really bizarre to like certain healthcare companies. I say bizarre because we don't, it's very catch as catch can. I think that we got a very positive note about Eli Lilly, and it's just off to the races. And again, that's because I think some degree that Biohaven couldn't deliver on its Alzheimer's drug. So the market's all over the map, Catherine. So it's difficult to try to reach a conclusion about what we should do here other than be bullish.
Well, Jim, I'm glad that you bring up the bank stocks in particular because we are, as investors should know, in the middle of earnings season. Now, on Friday, you covered your plan for earnings on Mad Money, but how should investors really prepare their game plan for this particular earnings season?
Well, I think that they have, well, of course, obviously, we're going to give complete coverage for our names on for action alerts. But I think you have to recognize that there is a belief that whatever numbers that come out now are not nearly as good as the numbers you're going to get in the second half when you have 5% growth. So that kind of dictates the insistence of buying Darden, which people like that in the sense that they can spend a lot of money on technology. It has a lot to do, I mentioned that just because that's discretionary income. It has a lot to do with how Boeing hangs in there. And I think that Boeing is a fantastic market economy opening stock. And then once again, it's the oils. And I think that those are a trade, and I've recommended that people can buy Chevron or Pioneer. But those are very much stocks that are part of the reopening trade. So it's the reopening thing. Maybe that's what the semis are doing going up. That is preeminent. And then don't forget, there's a really big move in GM and Ford, and that is about the reopening and also some EV. We're recommending Ford very heavily. It's one of our largest positions. And I continue to tell people it's a different Ford. I took a lot of heat this weekend from people who don't know my record saying that, well, Jim, you backed Ford every single time, no matter who's the CEO. The last CEO I thought was terrible and said that the day he was hired. This new CEO, Jim Farley, is really excellent. I urge people to take a hard look at Ford and buy it.
Jim, let's circle back to the banks because Goldman Sachs in particular posted earnings. It was also your mad dash, and you tweeted buy GS. So, Jim, buy GS?
Oh, yeah. I mean, here's what happened with Goldman Sachs had an amazing run. We've been recommending it the whole way. So now it's coming back off. But the fact, and by the way, partners are able to sell the next couple of days. That's always been bad for the stock. But I want people to buy into the weakness. Now, there's a lot of people who have been talking about buying only strength. And that's not my style. I'm saying you get a chance in Goldman. I feel like you got a chance in Wells Fargo. These stocks are getting re-rated, meaning that there are people going to be paying more for them than before for their earnings just because they're consistent and they do well during a period when the economy opens. The really interesting thing is the worst one was Wells Fargo. Now, we like Wells because we like the worst one. It's got a lot more upside than a JP Morgan. But I just think that when I look at Goldman and I look at what they've done and I look at what they can do, I say, let it come in and buy it. And just be amazed that this thing might be selling it. I don't know. I mean, maybe it's selling it 7 times earnings. That's how good it is.
Jim, what about Bank of America? They also posted stronger than expected earnings earlier this morning, following okay earnings, as you just said, from Wells Fargo and that large beat from JPM.
I like
so what do you make of?
I liked them. They had net interest income that was very good, and people didn't like the bottom line, but the bottom line was very much involved. Um, New York State is now going to be able to. New York City is going to do new vaccines without worry about resupply. That's very positive. But Bank of America is really kind of a quandary because everybody seemed to want net interest income to be really good. So Bank of America then delivers it really good, and nobody cares. That again has to do with the fickle nature of bank investing. Uh, Wells Fargo, the worst. It goes up today. JP Morgan opens up strong and then gives up the gain. I think that you buy these stocks into weakness, but accept the fact that because they've had such a big run, people are going to focus on other stocks that haven't.
So going into a different chain, let's talk about Janet Yellen's confirmation, which began at 10 a.m. this morning. What do you want to see from this?
The same thing I want to see from Gary Gensler at the SEC. I just want an attitudinal change. I want them to be able to show us what can happen and be very transparent and very honest. And I think that the latter has been in short supply. If they're honest and negative, at least we know. No more pangloss, no more lies about the economy. And I like that. Now, a lot of people are going to say, well, wait a second, when we see it, we won't like it. I think that what's happened is that we've really decided that you can't trust anyone. But then Yellen comes back and Gensler comes back, and they're people whom we trusted before, so why shouldn't we trust them again? Old hands are not a bad thing to have.
Jim, your stock trading this morning was UnitedHealthcare. It's interesting. We haven't talked about this name in quite a while. So how should investors approach this stock?
Well, I feel badly. We owned it for action alerts. We made good money. We fought it for a long time. But then we decided, you know what, we've got other battles that are worth fighting and not this one. The expectations here are not nearly as high as they've been. The multiple is actually, well, the numbers I think they get is below 20. It's a consistent company. It's done some good acquisitions. I think that it represents a bargain versus the rest of the group. And I think that they'll raise, if you look at the earnings reports, the earnings expectations, they've not been elevated from what the company said they would do. And that's highly unusual for UNH. So I think you got a chance if we get the right, sentiment that healthcare is okay, and you'll know that by midday, then I think you probably want to take I don't like to take a shot, but I think UnitedHealth makes a lot of sense. And that's one that I'm looking at closely because I think that UnitedHealth, not at its 52-week high, and great opportunity.
And Jim, one of the highly anticipated earnings that we're going to get this week is from Netflix, which comes out later today. What do you want to hear from management here?
Well, Netflix, that last quarter was not that good. And what they do is they do like a trend line analysis of what's happened. And I think that there are a lot of people who feel that Netflix has been left behind by you're not going to do both Netflix and Disney. And I think that that's silly. I think that the people who watch Netflix, it's a worldwide phenomenon, and they're doing well. Now, Roku is become the way that people play, so to speak, this kind of thing, streaming. And do I want to own Netflix into the quarter? Yes, I do, because I feel that you own half now and half of it comes down because the stock has a tendency to react to, number one, the growth in subs, and then a few months later, or even just a month later, you start getting the talk that this quarter is going to be better. I mean, I know that sounds fatuous, but that's the way it trades. It just trades kind of on hope. But the hope has been justified for many cases.
And Jim, one of the other big news events, maybe not as much for the market, but definitely in general, is the inauguration, which takes place tomorrow. We are going to see a transfer of power from President Donald Trump to President-elect Joe Biden. Do you have any advice for investors as we prepare for the inauguration?
Well, I don't think so. I think that, I think there could be a short-term blip down if anything goes wrong. But I think it'll be well orchestrated. I think that people are going to be bullish about it. And bullish again in the industrials, and bullish in the solars, bullish in the Teslas of the world. Tesla up again today. Yeah, that's what I think people are going to go for. And I urge people again, GM and Ford, GM and Ford, GM and Ford. Those are the two best plays. And we own Ford Fraction Alerts, and I'm really confident that Ford's going to have a breakout second half.
All right, and with that, let's head on over to our Action Alerts Plus members only daily rundown show over on actionalertsplus.com. Thank you guys for tuning in today. Jim, thank you for tuning in. I'm Catherine Ross, and we'll see you tomorrow.